How does the tax system works in Canada? What should we pay attention to when we start and develop our business? How to get prepared for the future taxations, and to make it in the most efficient and the least painful way. Hi everybody, it's me again, Eugene from CBS, Canadian Business and Enterprise Services. And although I know that the tax season just has passed and most of us have filed their personal income taxes, these questions are being asked almost on a daily basis by my clients. So here's a short video, and with a small and a very important caveat. Keep in mind that I'm not a tax lawyer, I'm not a tax accountant, I'm not a tax advisor. It's just as a part of my operations and as a part of my team who does accounting and tax accounting, I more or less understand how the system works, and today's video is mostly for informational purposes, definitely not intended to give you advice, which I suggest everybody should seek from their own accountant or come to us and we'll provide you with one. So how does the taxation works in Canada? What's the difference between personal tax and business tax, and how to manage it in the right way, how to get prepared? So first thing first is a short explanation about the system and opportunities that it has. So Canadian tax system consists from two systems working together, accumulating, federal and provincial. So every single tax that we pay includes portion of federal taxation and provincial taxation. And the only reason why it's important to say is because if your business located in a different province, your tax probably will be a little bit different. Not by much, but still. Second thing, there are extremely wide and complicated array of options and opportunities of managing and planning your tax in a legal and proper way. There are tax credits, there are tax subsidies, there are ways to manage your payments to yourself from the company or from yourself to the company in a way that will reduce your future tax liabilities. And you have to keep those in mind when you talk to your accountant. Discuss them preferably before you start the year, not when you have to submit the taxes and there's nothing else you can do about that money that you earned during the previous year. So plan your actions ahead of time, not afterwards. From the personal perspective, most of you should know that the Canadian income tax system is a progressive one, which means the more you earn, the more you pay. And somewhere above $120,000 of personal income, each additional dollar, you will pay 50% of income tax on that dollar. So you will be losing 50 cents on each dollar that you earn. And technically even a little bit more, because that is just the personal income tax. We are also paying as employees, if we are, CPP and DI, which is pension and employment insurance, that combine together into a couple of thousands of dollars every year. So that is a personal tax. The more you earn, the more you pay. There are opportunities for tax planning on a personal perspective. The most known one is your RRSP, which is your pension plan, where you can put money with certain tax benefits that you can gain. Again, discuss it with your accountant, not a main goal of this video today. Now, business tax works differently. First of all, it's a linear tax, which doesn't change no matter how much you earn. Second, there are different rates of business taxation depending on the type of your business. So the basic business tax in Ontario, again consisting of federal and provincial portion, is 31%. But most of the businesses that are considered CCPC, which is a Canadian controlled private corporation, meaning that 50+% of the company are being controlled by the Canadian resident, enjoy the deduction of 18% in the income tax, which means 13% bottom line income tax on the corporate profits up to $500,000. So first $500,000 of profit, the company would pay 13% of income tax, and then the more you earn, the tax would gradually get back to 31% until you'll get to the amount where you will be paying 31% in income tax. So that is the basic. Now keep in mind, there, as I said, a lot of opportunities to plan your tax and to enjoy from different tax benefits, tax credits that the government offers to businesses for certain activities or for certain areas of operations. And the most, again, known and famous one is what is called SR&ED, or Scientific Research and Experimental Development, which means anything and everything that your business spends for the purpose of innovation, of research and development, of bringing new technologies to the world. You can, if you do it right, use to get tax credits. Technically what it means is that if you owe money to the government, that amount of expenditures that you spent on SR&ED would be deducted from you owing. If you owe nothing to the government or you spend more than you own, you'll get money paid back into your business as a compensation for your investment into the research and development, into innovative technologies in Canada. So that is one of the examples. And again, remember to discuss with your accountant how to apply to those programs, what are benefits, what are of course the drawbacks for your business potentially. Now one more thing before I end this video, and that is there are ways to manage the way you're being paid by the company, and that will result in different tax results. You have to sit down with your accountant and do the math to ask them to show you what are the bottom lines from each options. And what I mean is that as business owner, as a shareholder of your corporation, you can get paid a salary with certain personal income tax brackets, as I said, progressive ones, or you can get paid dividends, which are taxed differently and more complicated process, because the company gets a certain portion of the payment of dividends back to it as a tax credit, and combination of these two. And there are also other opportunities. So what you have to do at the end of the day or at the beginning of the year is to sit down with your accountant to plan what is approximate amount of money that your company will make from sales as a revenues and profit as a bottom line, where you are standing in that balance. So how much money do you need to get from your company, and plan how to make those payments to yourself in the most efficient and legal way, of course. One more thing, and the last one, promise, that keep in mind that in certain circumstances you can keep money in the company. So what it means is that if your company earns more than what you need, you can keep that money inside the company. It is still possible. The government seems very interested in changing this approach, but for so far you can keep certain amounts of money in your corporation, meaning it will pay only 13% corporate income tax, and you will pay your personal income tax only when you draw that money from your corporation, which could be in the future, where your income will be lower or your needs will be lower, so you'll stay on the lower bracket. That is again a proper tax planning that your accountant should help you with in order to make sure that you maximize your profits and minimize your tax liabilities, of course, only within the boundaries of law. Whatever is outside, we're not discussing here. We're not advising to anyone. Please follow the law, talk to your accountant, see how to do it right. So thank you for being with us. If you have more questions about this topic or anyone else, please leave your comments in the comment section below. I will answer any questions I can. If you want to see more videos and you have certain topics in administration or legal aspects of doing business, leave your requests and I'll try to accommodate if I can. And thank you for being with us. Again, Eugene from CBES, Canadian Business and Enterprise Services. Visit our website, www.cbes.ca. Send us an email, or you just can find some information that might be useful for your business development. Bye, and I'm looking forward to see you soon.